And today's guest is Okan Aybar. Welcome back to the show, Okan.
Thank
Okay,
you, Dale. Thank you very
welcome
much.
back.
Thank you.
So,
I hope
does this number mean anything to you? Were you paying attention to this CPI for market action today?
well, as long as CPI data comes strong, the Federal Reserve is not going to uh, is not going to stop raising interest rates. So that seems to me a little bit dollar
Friendly?
positive. Yeah,
Yeah.
and however, I should note that. Uh, I recommend traders to look at the break-even rates of the for the dollar.
Did you
Uh,
bring any visuals that you want to share your screen with?
yes, I have. If you want, since I just spoke about um, the, uh, the break-evens, can I share with you?
Yeah.
Sure. Hold on.
It's that green button at the bottom. Here we go.
Okay.
Looking at your screen.
Okay. What I'm doing right now is bringing up the break-even interest rate. I mean, sorry, the break-even rates between the euro zone and the dollar. I mean, the US.
Okay.
As you can see on this chart, that lately, very lately, in the US, the break-even rates in the US has been rising against the break-even rates in the eurozone. This means that the potential of interest rates to protect the investors against inflation or expected inflation is diminishing. And that is the reason why, as you can see, as this chart is increasing, the euro dollar pair is increasing too. So this chart is, I mean, this spread between the break even in the US and in the eurozone is very decisive in that um, nowadays, lately, the central banks are focusing on the raising the interest rates. So, with this respect, as long as whichever central bank increases the interest rates, um, its
So let me
currency is going to appreciate.
so let me ask you this. On the bottom, the yellow is
Let me
the euro
tell you.
US dollar, because it looks like it was a more higher magnitude move to the upside in the yellow than currently in the blue. Am
Yes,
I reading that correctly?
yes, exactly. This means, for example, looking at this very recent rise, if you see this one,
Yeah.
this one is, as you see, this is
Started
actually,
first. Yeah.
yeah, it is actually leading the euro currency, the euro dollar. It
Right.
is leading.
Okay.
Why
Right.
is it? Why is it leading? It is because it is talking about this chart is the difference between the break-even rates in the US minus the break-even rates in the eurozone. It means that if in the US the break-even rates increase, it means that the Federal Reserve has to do more to beat the inflation. If however, the Federal Reserve uh, is not doing well against the inflation expectations, then this chart is going to rise. So in the last one month or 2 weeks, let's say 3 weeks, in the last 3 weeks, the market has decided that the Federal Reserve's actions are expected not to be enough to beat the inflation. And that is the reason why the euro has been rising against the dollar. Okay.
Okay. Not
And
much.
oh,
I
not
mean,
much, but it made a move. Yeah.
okay. Yeah.
And looking at the well, I don't like to this technical charts, but the technical charts kind of are um, confirming that the euro dollar may move further to the upside. Maybe the highest is maybe, I don't know, maybe 109, but I do not think it is going to be more than that, because as you see, when the inflation data comes strong in the US, the Federal Reserve people are going to come up and talk about raising the interest rates further.
But
So
today, today's number was a good number. Uh, it was
yeah,
lower than expected, right?
yeah. I mean, I do not look at whether it's lower than expected or not. 4% is still very, very high inflation rate in the US,
Yes.
given
Okay.
given that given that we are heading towards uh,
A recession.
recession. Yes, yes. So that's why 4% is, I mean, 4% is really high. I mean, again, I personally do not look at the expectation, because expected data, where does it come from? We don't know. I mean, they're just expectations of other traders, but maybe they're found in the polls. But I look when I look at the market-based inflation expectations, such as this one, break even, it says to me that the Federal Reserve is not doing enough to protect the U.S. investors against inflation.
You
That's the
think they're
reason.
going to go tomorrow and surprise the market, and or are they going to pause and say that they're just going to evaluate, but they keep the door open for a hike in July? That's what the market's
Of
thinking.
course, they are going to keep the doors open, because they have to keep the doors open.
Right.
Otherwise, if you imagine that,
Why don't they just go today then?
to what?
Why don't they just tighten tomorrow
Well,
instead of
they are
waiting till July? Do you think
the
they'll tighten Wednesday?
yes, the reason why they are waiting is they want to see the economic data coming in and reflect on in the economy. That means, for example, we are talking about recession expectations. If there is recession expectations, and if it is true, then they might be thinking that one way or another, commodity prices are going to fall. So they're looking at the commodity prices, whether they're going to fall or not. If they're going to fall, then maybe they're going to say, let's not move too much and stay here where we are, and wait further and wait and see what's going to happen.
Well, don't you think that crude collapsing 4% yesterday after a few cuts by the Saudis in the last 4 months? We're in the
Yes,
low 60s. Don't you think that's emblematic of they're already getting lower commodities?
let
Grains
me
have
tell
been
you,
killed, everything. Copper.
the reason why they are cutting the production is because they are very well convinced that the recession is coming. So they don't want their commodity to fall. So that's the reason why. I mean, that is
Well,
an
it's not
indication.
working.
Huh?
It's not working.
Well, it is not working because recession expectations are stronger. So if that's the reason why the Federal Reserve is going to decide not to be so decisive on what they're going to do next, but they are not going to say that this is it. We're not going to increase the rates any further. They cannot do that because you don't know where the inflation is coming. The inflation is maybe coming from the cost side, which in this case is the price of commodities. If that is the case, uh, then it will be very complex for the Federal Reserve to make any decision. So I think they're going to have to wait for some time. They cannot say that's it. We are going to stop raising the interest rates. But there's one more thing I want to share with you, Dale, about regarding the silver. because as you know, silver is a commodity, is as important as crude oil because it is used in the industry. So it is an industrial metal. Uh, if I share with you the silver, my silver page, look what I have here. Here on the screen, this white line, you see this white line is the
Yeah.
convenience, this is the convenience yield of the silver. So the yield is basically what it is telling you. It is how much the investors are willing to obtain and hold a commodity, a physical commodity. Here we see that, here in this chart, we see that, as you can see, this silver convenience yields has fallen. This means that less and less businesses want to keep this metal in their backyards. They don't like to stock this metal. Well, this is a very good indication that the recession might be coming. But on the other hand, as you mentioned, because the, the Saudis are cutting the production, then the energy prices may fall. It creates an unknown about what the Federal Reserve is going to do. So the Federal Reserve is in the face of these unknowns. On one side, there are very strong signals that recession is coming, and on the other side, there are Saudis and other. I don't know. I mean, other energy prices are also increasing with the crude oil. So Federal Reserve is in between the inflationary and deflationary forces. So that's why they are not going to stop raising the interest rates. And let me share with you one more thing also with this regarding this chart you see on the page on the
Okay.
screen. As you can see, this convenience yield chart has been leading the silver price or when you look from the longer term perspective. So the fact that this white line, which is a convenience yield or 1 year convenience yield, has been falling for about 1.5 years or 2 years, whereas the price of the silver has been going up. Well, one way or another, the silver prices might be coming to
Lower.
around 22 area, 22, 21 area
Yeah.
in the coming. And I see that the technical indicators are also suggesting the same sort of thing. That as you can see, for example, on the MACD chart, the there's a sell signal going on, and the volatility is has been going down. So the volatility is going down means that there is a higher chance that a downward price pressure may happen soon in the next maybe one week or maybe maximum 2 weeks. So I
Okay.
expect the silver prices going down. That's the reason also why I expect the dollar to increase. And so one of your colleagues just said he short the euro. I think that's a correct position, I believe.
That was me.
That was you. Okay.
All right. Okay, some interesting looks and the kind of stuff we don't see much. Anything else on your mind you want to share with us today? Although you've been generous, so more
Sure.
than generous.
One other thing I've been looking at is this one. I just want to confirm with you. Do you have now a different chart here?
Yeah.
I
Yeah.
okay. I have this one is the same analysis for the crude oil.
Okay.
This white line is showing us the convenience yield, the 1 year convenience yield of the crude oil. As you see in the last how many months? In the last one year or 6 months.
Wow. I mean,
You see,
that's a perfect correlation.
exactly. I mean, it should be, and this is this is basically indicating that the market is very much undecided because on one hand, crude oil is being hit by the recession fears, and on the other
Yeah,
hand, the OPEC Plus is cutting the production. So
yeah,
I mean, this is so well visible on this chart. So the
right.
market is so much undecided. That's also true for the Fed. The Fed is looking at these kind of numbers, and they're saying that we don't know where the energy prices are going to go.
Yeah.
Uh,
Well, I do recall Paul saying that they didn't want to repeat the mistakes of the 70s, which was a stop and start monetary policy, where they thought they had inflation contained, only for it to reemerge a few other times during that decade. So he's already veering from that path if he pauses here, because he doesn't know. And he's guessing that it may be enough. And your pause, I'm not sure if the pause, what's he going to know in a month? Um, anyway, just seems to be a different path than what he had laid out, and I don't think he's getting all the measurements he wanted for inflation. And I mean, his two things for housing. Housing prices are actually ticking up in many markets, and he got some decent news on the claims Thursday, but the NFP last month was strong. So why is he pausing?
so that's exactly. So
You
on
know
one
why? You
hand,
want to know why he's pausing? Because
what
you and I could look at squiggly lines and formations and everything else, but there's a global banking crisis underway.
really? Uh,
You don't think so? You think
well,
everything's okay
well,
after?
it depends. It depends on the asset prices. Asset prices
Yeah, they
after,
need a bond rally. They need a bond rally. So
yeah,
that would help their duration trade out. And that's
yeah.
what's going to be engineered, I think, here. So that's the pause is to probably help give the banks a window to lighten
Mhm.
up on their duration trade and get a
Okay, so
nice.
so you're basically saying that the Federal Reserve is going to have to pause at some point because they don't want to overkill the economy, and plus they don't want to hurt the bank's bond
More
position.
about the banks. They don't care about the economy. The banks
Okay.
are their friends and allies, not the economy. It's all about the country club.
So then it's all about keeping the duration. I mean, they're focused on the duration of the bank's
They're
bond.
focused on that Janet Yellen said there'd be more consolidation in the
Uh,
banking industry, which is code for failures.
oh,
So
well,
anyway, that's my take. And it's interesting that a pro like you isn't even thinking about it. And so who is? If I bring it up and it's a surprise to people, yet we had major bank failures and everyone thinks things are okay.
well,
And if
we
you
had a
look at, huh?
sorry. I mean,
If you look at the,
we had a terrible banking crisis in 2008, but
yeah,
then everything recovered, right? So the
oh
people
yeah,
say,
it recovered
"Hmm,
after, most of America lost their homes.
uh,
And it was a great break to buy for BlackRock to scoop up all the real estate and then rent to the people who used to own it. Yeah,
yeah,
it recovered, but there was sure a lot of pain before it recovered.
yeah, yeah, that's true. That's
And
true."
this is, I think, in even, could be an even bigger uh, banking problem here. It's global and it's about their books. Anyway, that's just I'm a little bit,
No, you may be totally right. I mean, that's something that I haven't much
yeah,
thought about. Yeah,
yeah. So we'll see. I think that would be the reason for a pause. Because if
yeah.
he tightened the duration book looks worse. So maybe he'll give the market a few months to have a bond rally and 10-year comes down under 3% and they get bailed out on their positions a little bit. It's still way off from where it was a year and a half ago. So but every bear market has bear market rallies. I don't think it's the beginning of a new bull market in bonds. Like
Of course, yeah, that's for sure.
anyway,
It's
thanks for interviewing me today. Oh, I interviewed myself, didn't I? I really like your work and what you're seeing currency wise and silver wise. Real different way to look at it than most, and kind of confirms what classical analysis is saying at the same time. So thanks for bringing that to the table, Okan,
Thank
and
you. I
rearranging
appreciate it.
rearranging your schedule to be here.
Thank you. Thank you,
Yeah,
Dale.
we have a
My
fixed
pleasure.
time, so I don't have flexibility with the time here, and I appreciate you, finding a way to make it here and share your great work.
Thank you, Dale. Appreciate too.
Where do you want people to follow you on Twitter, or is there any place that we could send people
If
that
you,
are
if,
interested in what you were talking about today?
yeah, they can follow me on Twitter. I can put these charts on the Twitter, and they can study and look at it. And if they have any questions, I'd be more than happy to answer them and give them further insight about what I've been talking about.
Okay, so you could find Okan on Twitter. He uses his name as his handle. So it's at OKANAYBAR. And you'll know a little bit. I never even knew there was a convenience yield. So thanks for educating me today too, buddy.
Thank you. Thank you.
All right, everyone. Good luck the rest of the day. Okan, thank you. And good luck. You could join the team in about, I don't know, let's see, it's 19 minutes for the morning edge, and keep up with what they're doing on this day. And this is just a warm up for tomorrow. So good hunting. Don't just count your pips, count your blessings, everyone. And I'll see you. Barry, I agree with you. Like 08, what was it? It was Washington Mutual, and then it was Bear Stearns, and the moment didn't come until Lehman. So you're right. It could have a long lag. This thing could play out for quite a while. All right. That's a wrap. Adios, Warriors.
Thank you.
See you, buddy.
See you.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.